Have you ever wondered what puts your business more at risk for IRS audits? You're not alone. I'm Joy Lutz with Align CPA, and I'm here to talk to you about the top red flags that can trigger an IRS audit and how to avoid making them. Red flag number 1, making too much money. There's no such thing as making too much money, but if you make more than $250,000 per year, it increases the chance of an audit. Make sure you're compliant. If you make more than $1 million per year, your audit rates can go up to over 10%. There's nothing you can do to avoid this, certainly nothing you want to do. So it's imperative that you ensure compliance and establish a relationship with a firm that'll support you when you do get audited. Red flag number 2, forgetting to claim income shown on Forms W-2 and 1099. Most of the income that people earn is going to be reported to you and to the government on a W-2 or a 1099. The government gets copies of these forms, so if you forget to include these on your tax return or you forget to give these to your tax preparer, you will eventually get a letter from the government stating that you owe more tax. Maybe it's just a bill with some penalties and interest that you'll pay, but if it's a significant amount, it can trigger an audit. Keeping track of your income and knowing it's always your responsibility to report it is imperative to maintaining compliance and avoiding the dreaded audit. Red flag number 3. Making charitable donations considered large for your income. The IRS and most states will let you donate to up to half of your income, sometimes even 60% to charities. However, when you exceed 10%, it can trigger a look by the government because charitable donations in excess of 10% of your income are considered higher than average. All you have to do is document these charitable donations and save your receipts. If you're donating items other than cash, save those receipts too. If the item's worth more than $5,000, you have to have an appraisal along with the receipt. Red flag number 4, claiming the home office deduction. This is one of the most heavily abused tax deductions in our country. It's a legitimate deduction to claim, however, it must align with the business use of the home. The problem is that there are a large number of people that abuse this and deduct more expenses related to their home than they're supposed to. If you do work from home, certainly take the deduction, but consult with your tax professional to make sure you do it properly. Red flag number 5, losses on rental of real estate. If you lose money when renting out real estate, you can deduct those losses on your tax return to offset other income. However, there are rules limiting the amount of those losses that will potentially affect you. The best thing to do is consult with your tax professional and they can help you understand these rules so that you can do it properly and deduct the losses that are allowed and then carry forward the other losses. Red flag number 6, meals and travel expenses. These are also some of the most abused deductions that people try to claim on their tax returns. Your meals and travel must be directly related to your business. You need to properly record who you're meeting with and why so there won't be any questions. Red flag number 7, business use of vehicles. Many businesses have vehicles used exclusively for business purposes. This is what the deduction's all about, as long as you have another vehicle available for personal use. When people get into trouble is when they either don't have another vehicle or they have their business own all of their vehicles and are not able to prove one belongs just to them. Red flag number 8, losing money for too many years in a row. The government can deem that business be a hobby and disallow the deductibility of the losses if this happens for too many years in a row. The likelihood of this goes up if this is a home-based business with no employees. Red flag number 9, businesses dealing with a lot of cash. Make sure to deposit cash into your bank account just as you would with checks or credit card payments. If paying business expenses with cash, it's very important to log and save each of your receipts to prove that they are legitimate business expenses in the event of an audit. Red flag number 10, foreign bank account. Putting money into a foreign bank account is a very common method of hiding money from the government, especially when wanting to avoid taxes. Red flag number 11, cash transactions over $10,000. If you deposit $10,000 or more of cash into a bank account, the bank by law must notify the IRS and the State Department of Revenue. Red flag number 12, claiming deductions that are high compared to your business income. Since this may include many scenarios, we highly recommend consulting with your tax professional to ensure you're taking the appropriate deductions and recording them properly. While these red flags can all be legitimate business activities, an increase or misuse in them leads to more taxpayers being audited. Maintain records, and when in doubt, always consult a tax advisor.